we weren't intending to sell the business. And so we're trying to get our number. They're trying to get their number.
If you're like a dancing bear in your company, that's a tough one to sell. Jared, welcome to the show, man.
Happy to be here.
Dude, I'm so excited to have you on the show. It's really fun because we get a chance to talk every Thursday. We have a little mastermind, and some of my best ideas have come from Jared. Some of the biggest changes to the business I can attribute to your brain. So I'm so excited to have you here on the podcast to just talk to you and interview you.
Yeah, I mean, I've been waiting for my invite for a while now. You know, you say I'm attributed to all your greatest ideas, so I guess you didn't want me showing you up.
Dude, so the reason I wanted to bring you on the show, besides to show off your brain power, was to dive in and talk a little bit about something that I don't think gets talked about that much, which is what it actually is like to go through the process of selling a business. And it's been interesting because I've had kind of a front row seat to you going through the process of selling your business over the last 8 months. What was the entire process? It was what?
Yeah, just under a year. We weren't intending to sell the business. Just for a little background, I run a financial media and publishing business. So we do info products, courses, trainings, newsletters about the stock market, trading options, and anything kind of finance stock related. And these kinds of businesses, typically people tell you, oh, they don't sell because it's a cash flow business. A lot of the times it's a lifestyle business. And we weren't intending to sell. My business partner and I, we were basically just going to ride this into the sunset and cash flow it and put a team in place. But in May of last year, May or June, I think May of last year, we got an email saying, hey, we're interested in buying businesses in your industry. Do you want to talk? And that kind of kicked off that process.
And fast forward or go back, rewind a little bit more. And you, right before that, I mean, COVID had been pretty good to your business, right? The demand for your services and the newsletter and everything had kind of spiked up, and you guys are growing really, really fast, coincidentally at the time when you got that email. Yeah,
COVID it was so funny what happened during COVID because COVID kind of hit the mainstream consciousness in mid-March. The financial markets had been watching it since late December through January because it was wreaking havoc in China. But at the same time, in mid-March, our order forms broke. We didn't know it. So our orders went to zero right as COVID was just spiking. And so we just thought it was COVID and nobody was buying. But actually our order forms were broken. And so we were getting zero sales. And we're like, well, I guess it's COVID. We're just going to shut down the business and everything. But that was just kind of a random coincidence. But yeah, COVID really turned millions of eyeballs onto the stock market and onto the financialization of the world. And so that just created a huge audience for us, a huge new swell of audience. But also, if I think about it from an investor psychology, people were scared. And so they were scared. And in my opinion, a lot of people were kind of kicked in the butt and they said, wow, I don't really have a good grip on my finances. I've just been kind of living life like blue skies forever. And we finally saw a real existential threat to our existence. And I think that woke a lot of people up to the value of spending time to invest in their financial education and even invest in learning about stocks and the stock market. Also, a lot of people just had a lot of time on their hands. They were sitting at home and they were watching the stock market bounce down. And another kind of confluent factor is a lot of people over the last 12 years, since the pit of the Great Recession, it's a buy the dip market. And so buying the dip has always worked for the last, even I think 13 years. March of 2009, I think was the bottom. And so a lot of people have been conditioned to just buy the dip. And so they saw this huge dip and everybody's like, how do I buy? And helicopter money doesn't help, or helicopter money pretty much helps everybody in the e-commerce and online business world.
And then crypto, right? Crypto has brought in a whole new class of investors. And I also think sports books on people's phones and being able to gamble, it's another one where people are more comfortable moving their money around on their phone?
Yeah, actually, another factor about that was sports were canceled. So a lot of people were kind of looking to scratch that itch, trading options. I mean, and then you had the whole, what was his name? Deep Value, DFV, Deep Fucking Value, and the whole GameStop event of 2021, which once again just brought more and more people into the nexus of the stock market and investing. And so just kind of like tie all of that back together to our growth, we've been putting systems in place, operational systems, marketing systems, and kind of our process and our team in place. And, you know, with a little bit of luck, there's always a little bit of luck in business, and the right moves leading up to it, we were really able to capitalize on that growth and just ramp up our marketing spend right into as the market grew. And even as some competition struggled, and it really just allowed us to grow. I think we grew just under 100% in 2020 and just over 100% in 2021. Top line.
Your point about luck, right? In business, a little bit of luck. What's wild about that is at one point in March, your order forms broke and you were getting 0 sales and you accepted it as like the outcome of COVID. And then you go on to have 100% growth year.
Yeah.
And at that time, it's like, it's interesting to go back in time and start thinking about what our mindset was when it just kicked off. And you're right, there was a ton of fear and a ton of uncertainty around, you know, anything being possible. And I think that there's still that today with a lot what's going on in like Ukraine and Russia and that sort of thing. But it's interesting just to rewind a little bit. And then now you can fast forward and say, okay, well, a year later, you guys get contacted by a company, have no intention to sell. The reason I want to set kind of the stage was because you did have it was almost like a perfect scenario where your growth was ramping up and you get contacted by someone out of the blue who's like, I'm interested in buying businesses in your niche. What happened from there? Yeah.
So when someone says they want to buy your business, we did a small amount of due diligence, like who's this person? Are they real? And does anybody we know them? And the answer to that was yes. So we started a dialogue and we started talking, and it was pretty casual at first. You know, we had a call, we heard about what they were doing, and he said, I'm interested. And it was a pretty slow process to begin. And we would maybe do a call a month, and we just kind of got more information, and we were sharing more information with, should I reveal the name of the company yet?
Sure.
Yeah, so the name of the company is Financial Answers, which is owned by Tiffin, which Tiffin is a privately held financial technology business that really focuses in on wealth management. And yeah, so it was just an interesting opportunity that really I saw a big macro kind of confluence. I don't know if that's a word, confluence, a macro merging of media and technology.
And it's a strategic acquisition is what they were looking for, which exactly. Going down the path, if you start thinking about like where you can get maximum value for your business, it's generally from a strategic acquisition. It's generally not going to be from private equity. But yeah, it's just as a side note.
Exactly. And so that was kind of my whole growth mentality is we started developing software apps, and I saw media was a great acquirer for really high margin software buyers. Yeah. And I mean, when they were telling us what they were doing, I was like, wow, you guys are doing it on 100x scale versus what our tiny little business is doing. And so really what it came down to after that was just, you know, the number, like were they able to hit our number that they could essentially buy out our growth? And, you know, the negotiation process was, I'll say difficult. You know, it's always difficult when there is a lack of authenticity on both sides, and I think that's just standard in the deal making process. And so we're trying to get our number, they're trying to get their number, and yeah, it was difficult, and there was ups and downs, and it was like we would almost have a deal, the deal would almost close, and then there would be a wrench thrown in it, and we're like, oh, the deal's off, and we kind of repeated that process for like 4 months or something. And so, you know, my personal standpoint was, you know, we didn't want to sell. We weren't looking to sell. And so if we didn't sell, you know, no big loss for us. But because it was a good opportunity and because I did see the vision of the larger company,
Yeah.
We were pushing for it, and we were willing to work with the acquiring company to make it work.
I think it's an important point to kind of like hammer down here because, being, like I said, I meet with you every week and we have a little mastermind, and I would kind of see on a week to week basis your like emotions around the deal change. Like, oh yeah, I think it's going to go through. And then literally the next week be like, oh, there's no chance.
Yeah.
Yeah, it's done. It's just not going to happen. And then back to like, oh, it's back on again.
Yeah, and I think that's pretty typical for how a lot of deals are, because there's like informational layers and due diligence and sharing our financials and or getting our lawyer involved. And I mean, I learned a lot about the process and about where are the pitfalls, because it's not just about money in, money out. I mean, there's potential earnouts and there's holdbacks and there's warranties and then there's intellectual property, and is it an asset sale? Are they buying the trade? I mean, it goes down and down and down and down pretty deep. So there's a lot of stuff to talk about when doing a deal, especially a deal for a company that was our size.
Sure. Back to the strategic acquisition point, because I think that's an interesting one to kind of hammer down a little bit. And for anybody who's selling their business or thinking about selling the business, if you can find somebody who is, looks at your business as a strategic acquisition, the chance of you getting a higher valuation for your business is just much, much higher. I think of like an example, a large acquisition that happened very public was the Barstool Sports acquisition by Penn Gaming. Right. And I don't know what they sold for. It was a couple $100 million, something like that. But it was in hindsight, very obvious deal, because Penn had already had the ability to monetize their media company with gambling, right? One of the most high margin businesses out there. And they buy them for $200 million and then just pump them into their ecosystem and start driving sports books. And it's kind of the same opposite of what you're talking about. Like a media company would buy you to be able to, you're like the Penn almost of
opposite.
Yeah, it's the opposite.
Yeah. So, I mean, a company like Penn, their lifetime value of a customer is probably multiples higher than the LTV that Barstool could earn. And, they just have way more offerings, and people spend much more money on gambling. I'm sure Barstool probably had some premium paid offerings, but I would imagine most of it.
They were selling like ads and clothing.
Ads and t-shirts and stuff like that. And so Tiffin, they sell wealth management and brokerage services. And so the LTV of a customer is in the thousands of dollars for them. And they really, what do they want? They want names. They want an audience. And that's what we do. We're really good at acquiring names, monetizing an audience, and kind of nurturing that audience and bringing them in. And so it's a natural fit for big software companies that have huge LTVs to acquire media companies to then essentially get a direct relationship with that audience. And we've actually just started promoting Magnify. Magnify is the brokerage account owned by Tiffin, and we've seen a really good pickup from our audience. They're super interested in it, and it's a really easy. We send an email to our audience that, hey, check this out. It's kind of cool, and we can see the people starting to sign up for it. Whereas Tiffin, they don't have those relationships. They don't have those processes built for marketing, and that's not in their wheelhouse really at all, especially at the smaller size that it is.
Yeah. So given the fact that you guys were not looking to sell and you did sell, why do you think the deal was successful, even though, like, what did you guys do either unknowingly or, without thought of it leading to a higher valuation or a better deal for yourselves? What did you guys do that led the deal to be able to go through and the way that you thought about running your business?
It's a good question. One thing that really helped us is we kind of forecasted out our EBITDA over the next 5 years, and we developed a number, and we said, cool, if we got paid out a certain multiple over our next 5 years of EBITDA, we would take it. And that was kind of our anchor in the ground throughout the entire process, so that we knew there's a lot of people I talked to, entrepreneurs I talked to, who had talked about deal fatigue. And whether it's conscious or unconscious, a lot of times sellers, the process is so laborious, and it takes it took time away from running the business to do the deal. And it took a lot of time away from running the business to do the deal, to read through the documents, to have the conversations, to meet. And whether sellers do this consciously or not, whether buyers do this consciously or not, eventually sellers will get fatigued and they'll basically accept the offer, even if it's below their number. But we really held firm to that number and we said, this is our number or else we're not doing it. And that really worked for us.
Yeah. And just in ways that you ran the business, I mean, you guys were profitable and you focused on profits, I believe. Yeah, right. What was your mindset in running the business?
We were running the business for growth. So we were both of us were paid salaries. And so, if we broke even on the business, we were kind of okay with that to a certain degree. Obviously, we didn't want to break even every year. And the reason being that is because we saw the opportunity. There's a lot of tailwinds in the publishing space right now for finance. And, we talked about some of them, a lot more interest. Interest rates being low is very bullish for the stock market. It's very bullish for risk assets. And baby boomers, I think there's like 10 million baby boomers retiring every year for the next God knows how many years. And all those people are our customers, our buyers. And so there's just a lot of macro tailwinds. And so we were willing to invest aggressively on growth. And, that meant buying more ads, investing in more copy. We were developing software products to really build out a franchise. I mean, the biggest companies in our industry are clearing, in the mid 9 figures a year. And we never had any intention to run a business that large with, 150 people on the team. But we were willing to scale to, a mid 8 figures number in top line revenue and then either cash flow then or sell it then.
Sure.
So that's how we were managing the business. We were managing the business for growth when this new potential acquisition came in.
So outside of deal fatigue, which you mentioned, and this idea that things go from maybe a belief that the business is going to close to disbelief to belief, what else are things that you picked up and learned in this process of selling your business that people who haven't sold a business wouldn't know?
What's coming to me right now is just it's so much more than just like a transaction, because there's other people on the side of it. And so I guess what people may not know is that I think it's seen as a transaction, and like, oh, you see in the news so-and-so company sold for $35 million. And so, we see those big top line numbers, and I think a lot of people are like, oh wow, they just made $35 million free and clear. And that's almost very rarely how it actually shakes out. There's a bunch of different pieces that compose that $35 million. And, if you said your number, I want to make $50 million on the acquisition, it's likely that you'd have to sell the company for much more to guarantee that you would make $50 million. Also, taxes are a bitch. So I think that's one thing people may not understand, especially if they see a big top line number when it's sold. I think another thing that was surprising is that you could really like the people on the other side of the conversation, but that doesn't mean it's the right deal for you. We definitely developed a friendship with the team and the company that bought us, but just because we were friends doesn't mean that the deal is like a yes, or even that they still have their motivations behind what they're doing.
Sure.
And so just because people are friendly doesn't mean that they have your best interest or even know your best interest.
Sure. So as far as other people being in the deal, there's attorneys. Mm-hmm. Who else?
We had an advisor too, who was I'm not sure if he was a former Wall Street guy, but he runs a family office and he's seen a lot of deals. And so having him on our team was really helpful, because basically anything that we received, any communications that we received, we were able to filter through his experience because
Yeah.
neither Brett nor I were able or have ever sold a company before. And so there
Yeah.
was a lot of like definitions and terminology and just ways of speaking that were very new to us. And so he was very helpful for filtering that and also just filtering like what was possible and what was happening in the deals that he was seeing. So
Sure.
that was really helpful. So
Sure.
him, the lawyer, our bookkeeper, she was very helpful during all of this because obviously we had to have our books up to date and we had to have certain metrics on hand. And for the due diligence, that was really helpful as well.
Sure. Yeah, it's interesting whenever you go through something new in your life and in business, there's like a whole new set of terms and language that you have to acquire and learn so you can even discuss. And it's totally a disadvantage if you don't have somebody who can, you've got one side who are like professional deal makers and like that's what the only thing that they do. Then you've got the entrepreneurial side where you're professional business builders. And if that language is different, you have to like learn the language to be able to communicate with these people who are coming in, and they don't necessarily need to learn your language, right? Like they can
Yeah.
focus on the deal making side of things.
Yeah, what I noticed is that, and maybe this isn't how all deals are, but this is how our deal was, is that Ian, the CEO of Financial Answers, the company that bought us, he had a few very specific metrics that he was looking at, and everything else was just noise. And so that's what he graded our deal on was these very margin, number of names in our universe that was really big for them. So it was margin, number of names, and top line revenue. So revenue after refunds and credit card fees. Everything else other than that was basically noise for him. And so, yeah,
Sure.
he didn't really have to understand, oh, here's what, our operations team does, and here's where we're spending money on marketing. He didn't really care. He just wanted to see the top, those three metrics.
Sure.
Whereas us, we were looking at, I think our letter of intent was, some ridiculously long amount of pages of legalese. And, I'm not a lawyer. I have no desire to be a lawyer. I have no desire to really read through that. So I'm glad we had a lawyer who we really trusted and who we paid a fortune in legal fees.
Yeah.
And by the way, another thing that maybe people don't know is legal fees come out of your pie. They don't come out of the whole pie. The acquirer does not pay the legal fees.
Yeah. Oh, they're paying their own, right?
Yeah, exactly.
Okay, so fast forward in the future, right? Like you're still here, working, continuing to grow the business. In the future, if you were to start another business, is there anything you would do differently from the creation phase to optimize for an exit? Anything that you learned that you would like maybe put into this next business or look back and be like, oh, this is something smart that people who've done deals before probably understand and those who have not don't.
Yeah, I think one of the main pieces of building a business that's even sellable is not having any single points of failure that the owner is involved in.
Sure.
And so if the owner of the business is, the main source of revenue, they're the ones who fulfills all the products, that maybe they're the one who does all of the brand content and brand marketing, that would be something that I would always avoid if I'm building a business to sell.
Sure.
Let's see, what else? I think predictability is also a big one. A lot of companies that are looking to buy a business, they're looking for predictable cash flows, predictable revenue, predictable even org charts and teams. And so, yeah, just making sure that all of the marketing and the customer acquisition and the monetization was very predictable and predictable from a forecasting standpoint. So, yeah, we spend $100,000 on buying media. On average, we'll return, $75,000 in month one, and we'll have 150% ROI by 60 days post close.
Sure.
Yeah, so I think those are the predictability. Lumpy revenue isn't very attractive to a buyer because it just means that there's not processes and there's not as much consistent demand. Or maybe there's some...
There's also more stress in a business like that.
Yeah, it's way more stress because you're always working to do that launch that brings in the money rather than having kind of a built customer acquisition engine. So yeah, anything that I could do to make it more plug and play, where they buy the assets and it plugs right into maybe an existing org, or I can kind of just walk off and the team can kind of has enough momentum to carry itself. There's one more and it just escaped my mind.
Those are both really interesting. And I think going through and getting some of the hands-on experience, like you're always going to look at business differently. And I mean, that's kind of the journey in life and business. It's you get some experience and then it changes your perspective on how you think about things. I think for a long time, I was like, oh, I don't need to sell a business. I'll just do this thing forever because I like it. And that can change, right? And my perspective now has evolved to the point where, no, I'd much rather build a business that can be sold and then maintain the option to stay in it for as long as possible, right? Like if you build it the other way and where you're like, oh, I'm never going to sell this thing. I'm just going to optimize it for my lifestyle. Yeah. And like you could build a lifestyle business that you can sell. But to your point of like being involved with everything, right? Like there's choices that you can make where it's like, well, it's just easier for me to be involved in this thing and it's not that hard. I still like it until you don't, right? I think that's one of the things that can happen. It's like you like it till you don't. And so rather than pretending that won't happen, you just optimize for a future where your preferences might change and what you really enjoyed and what you're loving today might not be the same thing that you might not love it anymore.
Yeah, I mean, circumstances and situations do change and they change often. And so always having that option where you built an asset that can be sold rather than you just have to fold the company. I mean, I'm talking to
I was thinking dancing bear, right? If you're like a dancing bear in your company, that's a tough one to sell. It's a tough one to sell. Mm-hmm. There's people who are really, really successful dancing bears, but they have to keep dancing.
Yeah, or else the money turns off.
Yeah.
Yeah, the money machine turns off.
Who's the most successful dancing bear you can think of?
I don't know, maybe like James Altucher.
Yeah.
Do you know James Altucher? He's in the financial space. I mean, he's a dancing bear. He's up on there. He's on video. I mean, anybody who's a content creator without equity. So, anybody who's creating content but doesn't own the equity of maybe the companies that they're promoting or the products that they're promoting, those are going to be dancing bears. I mean, you think of anybody on like Fox News or CNN who's a talking head. If they're not talking, they're not getting paid.
Yeah. And there's also massively leveraged dancing bears. Like I think of Tony Robbins as like the most leveraged dancing bear of all time.
Yeah. I mean, yeah, absolutely. I think he has like 10 or 12 businesses that do over $1 billion in revenue. So he's done a good job to diversify his little dancing bears.
I'll change the trajectory here a little bit because it's something that I find interesting. Hiring, right? You went through a period of massive growth. And in the business, and you guys are a remote company with a really, really good culture, right? Like you all work from home, but you're connected, you get together, you do all the stuff together. You've got a great team. What have you learned about hiring over the last couple of years when you've gone through this really intense growth period? And how has your mindset shifted about who you hire, how you hire, just stuff that you've picked up that has led you to be more successful?
Yeah, there's a lot here to unpack. So I'm trying to kind of separate it in my mind. I kind of see hiring as there's two different types of employees. There's the skill position, and those positions tend to do 1 to maybe 4 or 5 tasks that are consistent, and they do them very well. They're very reliable people, and they're not going to do a lot of the high level strategy or maybe any like larger scale thinking about the why or the so. They're more like the who, what, when, and where.
Yeah.
There's a skill player, and then there's like the quarterback or the running back or the wide receiver who's there to kind of like score points. And so they're going to be more focused on how do we make money now and how do we make money in the future. And I like to optimize for having at least one point scorer in each like org branch, and make sure there's skill players underneath them. So that's kind of like my general hiring philosophy. If you have too many skill players, then usually the CEO or the management team is going to be doing a lot of the point scoring. And as the company grows, you can't do that much point scoring. You can only do so much. We only have so many hours in the day. We all have the same amount of hours in the day that Elon Musk does. So how does he do so much more than all we do?
He's massively leveraged.
Yeah. And so I like making sure you want to have a good balance of point scorers and skill and position players. People who block.
And are you a GM or a coach?
I consider me more. That's a good question. Those are maybe interchangeable in this framework. I think the coach coaches the players, and every once in a while, maybe that's more of the integrator operator, and the GM is more of the visionary. And so in the business, I kind of play both roles right now, and that's a big no-no in like the EOS Entrepreneur's Operating System. But don't believe everything you read in a book.
Maybe not everyone's as talented as you.
Maybe not everyone's as talented as me. That's a good point. So making sure you have the right mix of skill and position players and point scorers. That's a big hiring philosophy for us. And then when it comes down to culture, I'm looking to hire people who are self-starters, who can take direction really, really well, but then also they're not looking for consistent like management. They're not looking for a high touch manager. In remote work, it's so important that we can have a established process and a trust that process is going to run, and a trust that process is going to be corrected or fixed or worked on if it doesn't work.
Sure.
And so a really high trust is so important in that. And then just from like
how do you filter for that?
I'm looking for someone who has past success in a company, or they have some kind of an entrepreneurial kick of some kind. And there's a lot of people who they're unsatisfied with their job, and they might say things like, "Oh, we have too many meetings," or "Oh, my boss did XYZ," like they were maybe a little overbearing or stuff like that. And like, I just want to go do my work. And so you can find someone who's just like, just let me do my work. And the team can be really good about setting what that work is and like what the expectations are. Then I feel like we can find people who can fill that gap and do async work. That's another big thing is I'd like the majority of the work in a remote team to be async. So async meaning we're not all doing it together. We maybe set some high level goals or outcomes or objectives, and then the team splits. And we all work at our own computers, and then
your own timeline, right? Like
our timeline.
That's one of the beautiful things. Everyone's a little bit different, and some people are morning people, some people are a little bit later, and being able to maximize that and not just have to have it on the same thing. I remember I'll never forget you're closing your deal at poolside in Greece.
Yeah,
way ahead on the time zone.
Yeah, I mean, it was like maybe 5 or 6 o'clock in Greece, and I'm not I like to run let's say a new school style where it's like, hey, we all know what work needs to get done, and it's up to you on when to get it done. That doesn't always work for certain positions. Obviously, customer service has to be open for these hours, but for the majority of the people, I mean, one of the beauties of remote work is you can go to the gym at 2 o'clock when the gym's empty. Or you can go to your doctor's appointment or dentist's appointment or whatever it is when there's no traffic on the roads. What remote work isn't great for is the collaboration. And it's not as great for the team building. So we really make sure that we do something collaboratory. And that doesn't mean like hop on Zoom and let's share ideas. It's more like, well, let's hop on Zoom and find ideas. It's definitely much more of, hey, let's hop on Zoom and share ideas or share things that we've already been working on, rather than getting on Zoom to find the things that we're already working on. So you talked about leverage earlier, and I think another thing that really helps us build a strong remote culture is I value my time so highly, and I refuse to waste it on like nothingness. So that's kind of how I view all of my team's time too. And so I refuse to waste anybody's time on things that are, pointless or maybe could be done async. And so I think people, when we get the right people in the positions who value that too, and they value a meritocracy, that's, I read that book, Double Your Profits, that you recommended. And I was like, wow, I actually kind of really I did this and created a meritocracy where if you perform really, really well, we compensate you. I'm so happy to pay out bonuses to people when they do really good work that helps grow our profits. And I think our company, everybody really knows that and really understands that. And I think it's really motivating to the right kind of people. So we run a leaner operation than most, but that's because, I hire killers. That's a heated word nowadays, but I hire people who are excited to be the best.
You only hire murderers.
Yeah, I only hire murderers. Yeah, and I'm excited to do that because
on hard time.
They don't like wasting time because they spent so many years in prison, so they don't like wasting time, and they really want to get ahead and succeed in life financially. And I'm going to provide a platform for people to score points, and we're going to pay them to score points.
I really resonate with the respecting people's time. If you respect people's time and you hire people that respect their own time, it creates I think that leads to a much better work culture because everyone is aligned around this goal of respecting each other's time. One of the things that I always tell people when they first come on is like, if you have something that's really important to you, and that could be you want to go to the gym at 10 or something like that. And it's, you do something, you want to pick your kids up, right? Like if it's something really, really, really important to you, like please let us know. We're a small team at this point. We can work through that and make it so that you have this priority. We respect that. And everybody can work together, and that's what asynchronous does. Like, we're not going to force you to not pick up your kids if that's really important to you. And then I think when people feel that, they respect your time a little bit more.
Yeah, and I think most people have way too many meetings as a whole. I think most meetings can be an email chain, and how
many meetings do you have a week? Like, what does your meeting schedule look like when you say that most people have too many meetings?
What does my meeting schedule look like?
Yeah.
We do one managers call a week. So we get all the managers. Everybody just shares, hey, here's what I'm working on. Here's my update, and here's anything that I need other people on. And that's 45 minutes to an hour. And then we do a 30-minute huddle with the whole team, and that's more like, hey, here's what's going on this week. And here's our stats. So we share stats on that. Here's how our funnels are doing. Here's how our revenue, refunds, all of that. So the entire team is just saying they get a really good sense of the health of the business.
Yeah.
And then I sit in on a call once a week for about 30 minutes that just says, hey, here's all of the emails we're sending out in the next week. Our entire business model is send emails, write emails, and that's how we drive traffic. And then I have one call a week just about acquisitions. So where are we spending money? How much money are we spending? What promos are we producing? So all in all, that's 2 hours of meetings a week.
That's fantastic. And it frees up the rest of your schedule to work actually on the business and grow the business.
And then meetings I actually really enjoy taking is all book meetings with employees, and it's just a catch up, and I just want to hear how they're doing. It's not specifically work related. I'm not checking in on their success in the business. I'm just checking in with them as a human being. How are you doing? What's going on? How are they
Are you still on
feeling? Like, what's
parole?
exciting to them? Yeah, have they been checking in on their parole officer?
So you've only got killers.
Yeah, and one that creates bonds. It helps
Yeah.
work on the bond. We have to be intentional about creating those bonds, especially within a remote culture. And then two, it allows me to just get a really good sense of what they want out of their work. What do they want? What's exciting to them? And it wouldn't, like, if someone is maybe working on a side project and that side project's blowing up, I'd rather know about it so that I can maybe plan to find a replacement for them, and it's not a total shock that they're like, hey, I'm going to leave to start my own business. I'd rather know that than be blind to it.
I think
So yeah, like creating a culture of like openness, checking in on each other. Nobody calls to check in on me, but I'm the boss, so.
the alignment of like incentives and values and understanding what motivates people is such an underrated part of running an organization and business.
Yeah, I mean, I know you were at the workshop where it was talked about how people do things for their own values, not
Yeah.
yours. And so we all see the world through the lens of what do we value, and the person sitting across the computer screen, for us, sees the world through what they value, and they likely value completely different things than we do. And so, my role as a leader, as a manager, is to really understand what each person values, so that I can create opportunities for them to see how they can get that value through the work that they're doing. And if I can't do that, then it's likely not the right person in the right position.
Yes. I think that's one of the bigger steps that you can take as a manager and a business owner is going from the mindset of how do I get people to help me achieve my goals to how do I achieve my goals by helping other people achieve their goals.
Yeah, I have a great example of that.
You have what?
I have a great example of that.
Yeah.
Yeah, so one of our longest, actually, I think our third longest tenured employee after Lee, myself, is Ryan. And Ryan and I went to middle school together. And so when I was a wee lad, it must have been 7 years ago when I first started doing this, I contacted Ryan. I was like, hey, Ryan, we have this open position. Are you interested? And he was like, well, I'm kind of pursuing this whole music thing. I don't know. I'm like, listen, man, I think this would be a great position for you. It's remote. And I actually think it'll allow you to have a consistent income while still being able to pursue your music career. And so that was our deal for the longest time, is that, you could travel, you could be on the road, you could be doing late shows, and none of that really mattered to me. Whereas he couldn't get a lot of jobs that required him to be in an office or required him to work very specific hours. But to me, I was like, well, he's helping me by helping me get the work done, and I'm helping him by giving him a stable income that he can use to pursue his music career. And yeah, I mean, that was a great pairing, because he was so lit up that he had somebody who was like, listen, pursue your music career, go after it. And, all I ask in return is that, you do the work that we ask you to do, whatever you want. Yeah, and so that really helped us form a really strong working relationship, and he still works with us today, and he's moved up the ladder in skills and pay, so I'm happy with that.
That's awesome. We added this quarter something this simple, but it was, we have rocks. Everybody has a rock or multiple rocks for each quarter, and one of the things we did at the end was a personal rock. So it was just something that people just pick one thing that they want to do, that they care about for the quarter. And then at the end of our business check-in that we have on Monday, we go through and say, just check in on that one thing that somebody wants to do. Simple. And also, you have to learn enough about somebody to be able to figure out what they really care about outside of work, and support them and truly care about it.
Yeah, I like that. I might steal that from you.
Yeah. It's good.
I think because we're so asynchronous, and we also do an annual retreat, And so last year we took the whole team to Miami. We stayed at the W in South Beach, and there was a very small amount of organized work, but most of the time we were all just hanging by the pool. We'd work out together, and it was just a lot of fun. We'd go out to dinner, and obviously work was a big topic of conversation because that's what we all have in common, and that's what a lot of our shared interests are around. But it was just great to get everybody together in a social environment at least once a year.
Yeah, that's great. It's super valuable. I want to shift and talk a little bit about business model, because I know that's something that you have thought about. And one of the things that I've heard you talk about is like not reinventing the wheel, right? And that a lot of businesses come in and they have maybe some delusions that they're going to be different than other businesses or create something entirely new. How do you think about your business model, and what are some mistakes that businesses make when they are trying to innovate?
Yeah, so our business model it was invented in like the 70s by a guy named Bill Bonner, the founder of Agora. And he created this newsletter, and it was like, I think it was called Rich Retirement or something. And he basically taught people how to retire.
Who doesn't want to retire rich?
Yeah, well, he taught people how to retire in, I think, Panama or Nicaragua or something like that. And it's still running today. And so, this business model is a half of a century old. And when something's a half of a century old and it still works for a reason. It's tried and true, and you're going to create an offer, and whether it's teaching people how to retire in a lower cost of living country, or you're teaching somebody how to invest in dividend stocks, the subject does not matter nearly as much as the process for finding, acquiring, monetizing, retaining, and then cross-selling, upselling those customers. And so when I started in this business, I really, like my let's call it business idols, or people I looked up to in the business, they were running very innovative, very disruptive companies. Like, well, we're going to change the whole business model. We're going to change the world. We're going to do X, Y, Z. And I think a lot of that is glorified still in today's world.
Sure, for sure.
And there's a reason why. It's exciting, it's new, it's fresh, and the biggest winners who we've seen in the last, let's call it 20 some years, are people who kind of went down that path. They're all billionaires or whatever. But what we don't see as much, and actually what I got to see, because it's how my parents operated their business and how my grandfather operated his business, was the people who just found a tried and true business model, and they found a way to maybe add their own unique spin onto it because of who they were as a person, and they just continued to execute on that with commitment and with discipline, and allowed that to compound over time. And so the second I kind of realized that, I was like, oh wait, this business model has been done for 50 years. Like, why am I trying to do this differently? Like, why am I trying to expend all this energy to take something that I have that's tried and true and turn it into something that maybe my ego wants, where I'm like, oh, that'd be so cool. My ego is like, wow, I think I'd get a lot of recognition for that. So not trying to turn something into something else, like not trying to do alchemy, turn lead into gold. Like, I'm just going to find out what I can do with lead.
And just get really good at working with lead.
Yeah, just get really good at it. And then compound it. Compounding works in not just in the stock market or in your savings account or in real estate. It works everywhere. It works in our time. The more you spend doing one thing, you're compounding your skills, you're compounding your network, you're compounding your capabilities. And so once I kind of figured that out, and I was like, oh, cool, let me lean into that, I really invested in learning who the best in our business were and what they were doing and how they ran their businesses. And that just leapfrogged my success and my capability and my knowledge. So that was kind of like a little bit of a hack and secret that I found to really accelerate my growth and humble my ego at the same time.
Always good.
Yeah, always good.
Both those. There's nothing more fulfilling than beating Jared at pickleball. It's probably one
which never happens. Rarely happens.
One of my top 5 feelings of bliss and joy is eliminating Jared from a pickleball game.
And coup. You really like beating me in coup.
Coup, yeah. It's actually it is pretty funny though. We play this game coup, which is like a bluffing game, and it's a card game. And whenever we're playing, we instantly eliminate each other because of mutual threats. If we're at the same table, we're both eliminated immediately.
Yeah, it's actually not that fun. Play against Austin.
Jared, it's been fun, man. I appreciate you hopping on here and talking about kind of sharing some of your business wisdom and stuff you've learned. It's been fun. I've picked up a lot and learned so much from you going through this process of selling your business. And it's, like I said at the beginning, it's not something that you get a lot of exposure to unless you hang around with people who are going through that process or have gone through it. But it's a really big part of business. And I think, again, there's like evolutions in your journey where you might start something. Most people just start a business because they're seeking freedom. They're seeking an escape from what they are in, their current life circumstances. And then it evolves and changes. And they might realize after a certain period of time that, well, man, I built something that I don't really want to be in anymore. And one outcome of that would be to create something that you can sell. And it doesn't just have to be a tech company that gets sold. Like, you can sell a lot of businesses, but the deal structure and all that sort of stuff is pretty similar. And you pick up a lot and get better at it. So thank you for coming on here and sharing, man.
Absolutely. I've enjoyed it.
So you, for a while, were writing on Substack.
Yeah.
Really good. I loved all your stuff.
Thank you.
And then you stopped writing, but you're going to come back, I think, at some point.
I think I'm going to come back. Yeah, I think I'm going to come back. So
if somebody wants to follow you, there's Twitter, right? What's your Twitter handle?
My Twitter is @nations_Jared, but I'm not very active there. I'm more of a ghost. People have to find me in Austin at Barton Springs.
If someone wants to connect with you and they're like, all right, this guy's smart, how should they
send me a DM on Twitter? That would be the best way to connect with me. Yeah.
Cool. Awesome, Jared. Thank you, man.
Thank you. I've appreciated it.